By the year 2030, the Islamic FinTech landscape will be virtually unrecognizable from what it is today. What is currently a promising but fragmented sector will have evolved into a deeply integrated, technologically sophisticated, and globally interconnected ecosystem. The driving forces are clear: a massive, young, and digitally native Muslim population, coupled with the relentless advance of financial technology. To understand the future, we must first appreciate the scale of the present. The global Islamic finance industry is already valued at over $4 trillion and is projected to reach nearly $6.7 trillion by 2026. This market serves approximately 2 billion Muslims worldwide, a demographic that is not only the world's youngest, with 60% under the age of 30, but also one of the fastest growing. Historically, this population has been significantly underserved by conventional finance, facing a choice between products that violate their faith principles and a limited, often cumbersome set of Sharia-compliant alternatives. FinTech is fundamentally changing this dynamic. It is dismantling the barriers of high cost and poor user experience that have long plagued Islamic banking. Startups are building solutions from the ground up based on the core Islamic principles of asset-backed financing, risk-sharing, and the prohibition of interest, riba. This is not simply about putting a halal label on a conventional product. It's about leveraging technology to deliver financially inclusive and ethically grounded services at scale. Three powerful megatrends will define the next decade of Islamic FinTech, transforming it from a set of standalone products into a seamlessly integrated financial operating system for the conscious consumer. The era of one-size-fits-all Islamic banking is over. By 2030, artificial intelligence will be the backbone of the industry, enabling a level of personalization previously unimaginable. Imagine an AI-powered financial wellness app that not only tracks your spending, but also automatically calculates and disperses your zakat, obligatory charity, to verified causes in real time. Consider Sharia-compliant robo-advisors that construct and manage sophisticated halal investment portfolios based on an individual's risk appetite and ethical preferences, screening out companies involved in prohibited industries. This move towards data-driven personalized finance will dramatically increase engagement and loyalty among a generation that expects technology to understand and adapt to their individual needs. The most powerful technology is that which becomes invisible. By 2030, Islamic finance will be embedded directly into the daily lives of consumers. When purchasing a car or home, Sharia-compliant financing options like murabaha, cost-plus financing, will be presented as a frictionless, one-click option within the e-commerce or property portal itself. Takaful, the Islamic alternative to insurance based on mutual assistance, will be offered not as a standalone product, but as an integrated feature when buying a plane ticket or a new electronic device. This embedded approach will massively expand the total addressable market, TAM, reaching millions of consumers who may not actively seek out an Islamic bank but will choose a principled option when it is presented conveniently and competitively. The most disruptive shift will come from blockchain technology and tokenization. Islamic finance is inherently asset-backed, making it a perfect match for the world of digital assets. By 2030, we will see the widespread tokenization of sukuk, Islamic bonds, allowing for fractional ownership and creating unprecedented liquidity in a traditionally illiquid market. Real estate, a cornerstone of Islamic investment, will be tokenized, enabling small-scale investors to own a piece of a property portfolio and trade their shares on a secure digital ledger. This will democratize access to high-quality halal assets and enhance transparency, a core tenet of Islamic commercial law. Furthermore, smart contracts could automate complex profit-sharing agreements like mudarabah and musharaka, reducing overhead and building a foundation for a truly decentralized and ethical financial system. The Islamic FinTech market of 2030 will be a dynamic, multi-vertical ecosystem. While retail banking and payments will remain foundational, the high-growth areas will be wealth tech, insurtech, takaful, and social finance platforms for zakat and waqf, charitable endowments. Geographically, while the Middle East and Malaysia will continue to lead, The most explosive growth will come from the vast underserved markets of Indonesia, Pakistan, Nigeria, and the increasingly influential Muslim minority communities in the United Kingdom, Germany, and North America. For analysts and investors, the opportunity is clear. This is a first principles disruption of a multi-trillion-dollar industry. The convergence of a young digitally savvy demographic, a clear demand for ethically and spiritually aligned financial products, and the powerful toolkit of modern fintech has created a perfect storm for innovation. The winning companies of the next decade will be those that build scalable, user-centric platforms that are not just Sharia compliant, but Sharia native. The financial giants of tomorrow are being built today, and they are being built on a foundation of technology and principle.